What is going on, brothers and sisters alike? My name is Tyler and welcome back to the channel. And in this video, we're going to talk about one very important thing, clear the air once and for all. Are options on AMC hurting the mother of all short squeezes? We're going to go over the pros and cons of what is happening every single week on the option chain. So definitely, if you guys are unaware of the situation, you definitely want to pay attention to this video. So drop that like on the video, subscribe to the channel, and let's get into it. So first and foremost, we're going to go over this article, basically giving some background about options, in their opinions, what the pitfalls are and what the benefits to options actually are as well. So options, some background first. Options are derivative contracts in which the contracting party, in quotes, the long side of the trade, is given the right to buy or sell a fixed amount of an underlying asset at a fixed price before the contract expires. A call option gives the holder the right to buy an asset, a put option the right to sell it. Buying call options helps a bullish trader in two ways. First, the maximum amount of loss incurred can only be the price paid on the option itself, even if the underlying asset, in the case of AMC stock, were to go to zero. Second, options, especially out of the money ones, can expose the trader to more than 100% of the notional value of the underlying asset, creating leverage. As we do know, options are the best form of leverage, in my opinion, when they are played correctly, and in my personal opinion, not with AMC stock. But we're going to get into that more later into the video. So AMC options, the pitfall. Think about it. AMC stock is very volatile, and the chances of its prices going up to the moon or heading towards something close to zero are not immaterial. Call options give the buyer unlimited exposure to the upside, but limited exposure to the downside. Why then wouldn't all traders want to express their bullish views through options? The simple answer: they cost too much. An at-the-money call on AMC that expires in only 1 week was worth about $7 per share on August 24th. This is the equivalent of 15% of the value of the underlying asset. That is, the option holder could only begin to make money if AMC jumped another 15% in a matter of a few days. Traders that buy these kinds of options regularly enough end up spending so much on the derivative instruments that they might as well have bought the stock itself. And this part is very important as well. Sellers are better off. So people that are actually selling you the options, the market makers, the people behind them. Yes, you and me can go on the open market and sell options. We can sell calls, agree to give our shares up at that strike price, collect the premium. It's not a bad strategy. I do it all the time in my personal portfolio as a passive income type strategy. But when it's done with hundreds of thousands of contracts on AMC stock, it is giving the market makers, the hedge funds, the institutions that take about 90 to 95% of the back end of these call options, and basically giving them millions and millions of dollars every single week of free liquidity coming from mine and your bank account. So definitely, that's just my opinion on it. Those are the facts behind it. But sellers are better off. At a higher level, option sellers tend to come out ahead of option buyers. This is not only an adage in the financial industry, but also a conclusion reached in academic studies. Therefore, in the aggregate, apes that use options to express their bullish views are likely handing money over to market makers who sell them the instruments. The economics become even worse for apes once AMC stock rallies, as it did a few days ago. This is the case because implied volatility spikes when shares do so as well, likely driven by FOMO and greed pushing the options prices substantially higher. Notice below how volatility implied in the price of options shot to the moon in January and June when AMC stock rallied viciously. Basically, the implied volatility is the implied move of what is going to happen. It basically makes the options go up more in value, can go up a lot more in value, hundreds of percents or even thousands of percents in any given day. And when people continue to flood into those, you are paying what is called a high premium. What you are paying for an option is called premium. But when these options go up hundreds or thousands of percents in a given day, you're paying an astronomically high premium for these options, which the market makers are collecting. So they actually love when stocks go through high implied volatility phases because they collect even more money. And odds are you see a stock shoot up, it shoots right back down that whole way up, or even at the top when people are buying those calls. the market makers, the hedge funds, institutions are getting so much premium for those calls. It is absolutely insane. So Wall Street memes take on this situation. While trading options on AMC has its pros, it is likely costing apes too much, while slowly making option sellers richer. Before buying an AMC call, consider whether outright ownership of AMC stock might make more sense instead. And that is basically what I've been saying this whole time. In my opinion, I love trading options. I love trading options. I love the leverage it does give you. We have been hitting monstrous trades in the buy and sellers. If you want to check that out, link down below in the description. But I don't like it on AMC stock because you're trying to time when the stock is going to go up extramentally in value. Like we just talked about, if you're buying an option, let's say on Tuesday, odds are the stock has to go up 15 to 20% to even break even on those options, which doesn't always happen. So when you are paying that money for the options, the market makers, the people that are short on AMC stock are the ones that are collecting that premium, essentially giving them all this free premium, or just money in general. If you guys don't understand premium, that is what you're paying for the contracts, but giving them all of this free money to stay in their short positions for a longer period of time. Yes, I do know that there's other stocks on the stock market, obviously, that people trade options on, and these market makers, hedge funds, institutions that are short in AMC stock are doing this with other stocks as well. I get that, but AMC continues to be one of, if not the highest traded stock when it comes to options on the whole entire market. So the liquidity field in AMC's options are off the chain, with hundreds of thousands of options on any given week. If we're seeing less than 100,000 options on any given week, that is a rarity in and of itself. So essentially, point is here, guys, a lot of people are better off just buying the shares, in my personal opinion. Now, when it comes down to the actual gamma squeeze, though, when we do go through the short squeeze, we're going to need to see a gamma squeeze and a short squeeze as well. We're set up for the short squeeze. We're set up basically once a month on these monthly options expiration dates to see a massive gamma squeeze like we are setting up to see on September 17th. But in the meantime, before we actually do get this gamma squeeze that leads into a short squeeze, you're not helping the movement whatsoever. You're hurting the movement, in my personal opinion. And I'm not a financial advisor, not a financial planner, or your dad. So ultimately, do whatever you guys want to do. But that is why I personally do not buy options, because that money goes from your account into the market maker's account, and we see how many options every single week do expire worthless. It is absolutely insane. All of these options tend to get pushed out of the money on Thursday, in my personal opinion. Hedge funds, institutions, market makers, they don't want those options to remain in the money on Friday, so they don't have to do as much hedging. That is why we typically see down days on AMC on Thursdays in between about 5 and 10% to the downside. So that knocks out most of the options that were actually in the money. We just seen that last week with the $45 strikes. About 25,000 options were knocked out of the money, and that is a lot of money. That is millions and millions of dollars that is being collected that the hedge funds, institutions, and specifically market makers get to keep. And as we do know, Citadel is one of the largest market makers that provides the most liquidity on the whole entire stock market, so they are keeping a lot of this free premium. So that is basically the gist here. Yes, there is a good side of this with the gamma squeeze. When that does start leading into the mother of all short squeezes, that is definitely a good thing when the actual short squeeze and gamma squeeze does start. Until then, in my opinion, it's not a great idea to be buying options. And then also the negatives are very, very clear with this situation. But something else I do want to point out as well, if you guys are worried or have anxiety about your positioning, it's probably not because you have shares. It's probably because you have options and you know those options are going to expire worthless. Even myself, I've been trading options for well over 3 years, almost 4 years now, and I know how to trade options. I'm successful on options about 80-90% of the time. But when I have options or a large options trade and I don't know which direction it's going to go in, when you're sitting on the verge of losing a lot of money or making a lot of money, that right there will get my nerves going. That is another reason why I don't trade options with AMC stock. I know the mother of all short squeezes is coming. I don't want to lose any money on AMC, right? So if I trade options and it doesn't happen to go in my direction, then I'll lose all that money. So there's definitely a bit of worry, I think, in a lot of apes that are trading options versus the shares. And that is simply why I just buy the shares as well, because they never expire worthless. When the mother of all short squeezes does come, you will have all your tendies in one basket that will never expire worthless. So that is my overall opinion here. That is Wall Street Meme's opinion as well. Drop that like on the video if you got anything out of the video. Comment down below. Let me know what you think about options. Do you think this is a good thing or a bad thing or a mix of both? Somewhat like I do myself, definitely weighted towards the negative side. Also, hit that subscribe button and turn on that notification bell. Also, check out the 3 links linked down below in the description. There is a free AMC Discord chat, obviously all about AMC. There is a link for the buy and sell alerts, like I said earlier in this video. There's also a link for public, no payment for order flow whatsoever. Get up to $70 in your choice for your stock. It only takes about 3 minutes time with no need to link a bank account or deposit a single dollar. So check those 3 links out, but I will see you guys in the next video.